good times to invest in stocks. The two scenarios that I find to be perfect for investing in stocks are at the trough, lowest point in the business cycle, and during certain parts of an economic expansion. The first scenario is during the lowest point in the business cycle, and that is because when you are at the bottom, the only way you can go is up. Generally, at this point in the cycle, all of the amateur investors have sold off all of their good investments for relatively low prices to astute investors who understand when to be greedy. The second scenario is when the economy is going through a lengthy expansion with very low interest rates, as well as little to no inflation. This is a perfect scenario, as it usually indicates that the economy is flourishing and stocks will generally be the benefit. Usually, in most expansions, the demand for goods is so high that inflation gets out of control, which leads to rising interest rates. So if an expansion is present with both low inflation and low interest rates, it is usually a great time to invest in stocks, as corporate profits will likely continue to increase and set new earnings records, which normally will increase a company's stock price. A bad time to invest in stocks. When the economy is expanding and signs start arising that the peak is near and that a retraction is coming, it is usually a very bad time to invest in stocks. Generally, during an expansion that is nearing its peak, the Federal Reserve will usually raise interest rates in order to counter inflation that eventually accompanies an expansion, and economic activity will begin to decline. Usually the new and continuing unemployment claims will start to increase, and many economic reports, including housing starts and the retail sales report, will start reporting stagnate or declining growth when the peak is near.